I witam gorąco w kolejnym programie Bitcoin Feniks, Krypto Poradnik. Dzisiaj porozmawiamy sobie o tym, jak instytucje już od początku tego roku manipulowały całym światem krypto, jakie wiadomości tutaj sprzeczne nam dawali i oglądnijcie ten film z wielkim spokojem. Ja polecam, żeby naprawdę nie oglądać tego w pracy, na przerwie, bo tam są napisy, więc najlepiej na komputerze odpalić sobie to wideo. I ja uważam, że to jest jeden z lepszych, albo może najlepszych filmów, jakie dodałem do tej pory. Może otworzyć wiele oczu i zobaczyć tak naprawdę, komu ufać w tym świecie krypto. Ja Was zostawiam z tą myślą. Oczywiście dziękuję i już tutaj się z Wami żegnam. Pamiętajcie, żeby zostać z Bitcoinem.
The other day was, why are you calling this the great crypto conspiracy?
Okay.
And when you explained it to me,
Yeah.
it's really, people should go to jail, but it's not illegal.
No.
And this is really horrible. And it's why we all feel so freaked out. But they are feasting on our savings. And it's an enormous robbery, quite honestly.
It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid-90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Mm-hmm. Nobody should be buying this stuff. Mm-hmm. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
hang on just a second, before you go on.
Yeah.
This one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, I'm just taking the junk off the table.
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes. But during this period of time, the regular individual couldn't get a mortgage. Right? It was virtually impossible to get a mortgage during this time, exactly when institutions were buying. And then the dot-com crash in 2003. If you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, oh, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks,
people listen.
People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says you fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
So it's just, I mean, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out?
Yeah.
His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. And this is the kind of thing that George Soros is famous for this, talking the sterling down.
Yeah.
And what did he do? He stole the pensions of all the little people.
Yeah, made $1 billion.
Yeah. Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk. And
I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%, and then what do we find out? We find out here, they say BTC 0, and then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to zero. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out. And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, it walks like a duck, it quacks like a duck.
And you know what?
It's probably a duck.
The people, they all hang out together, they all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency. Right. Have you ever heard her say all banks should band together against illegal arms?
No.
Or illegal drugs?
No.
Or human trafficking?
No.
No. But this nascent asset class, we must all join arms against.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is over.
Selling. Yeah.
So let me show you, can we show a chart of the 5 crashes? This is from, I think...
Last year, right?
Last year,
yeah.
Okay? Do we have that chart of the 5 crashes of Bitcoin?
Right. It was 30%. Right. I think 4 of them were 30% and 1 was 40%.
And this is, here it is. Explain this chart. Those are Amazon crashes.
Okay, so these are Amazon.
Do you have Bitcoin?
Yeah, we need the Bitcoin chart.
We are.
All right, they'll come up later. Okay. Yeah. So what I want to talk about now is one of the key lessons I learned from being involved in the market so long is rather than listening to what people are saying, look at what they are doing.
Correct.
So this is what we should look at, and this is what I want people to focus on now. Billionaire hedge fund manager Stephen Cohen, who's worth between $12 to $14 billion, by far the smartest hedge fund manager in the world, I would say of the last century, is buying Bitcoin. $6,800, buying Bitcoin. Mark Lazary, Avenue Capital Group, worth about $1.7 billion, has put 1% of his net worth into Bitcoin at around this price, $7,500. Andreessen Horowitz.
Mark Andreessen.
That's right, Mark Andreessen. An early investor in Airbnb, Skype, Facebook, just launched and Coinbase, just launched a $300 million fund. Wellington Capital, they have $1 trillion in assets, are starting to get involved in Bitcoin futures. Susquehanna, the 12th largest trading firm by volume, they now have their own Bitcoin custody department, their own trading department, and they're trading Bitcoin and Ethereum. Goldman Sachs, this new CEO, David Solomon, the most pro-Bitcoin / cryptocurrency guy on Wall Street. The most pro
Goldman Sachs.
Goldman Sachs. He's the new CEO. He's coming into power shortly. BlackRock, this announcement just came out. The world's biggest asset manager. Now, last year, Larry Fink says, oh, you know what cryptocurrency and Bitcoin's good for?
Yeah.
Money laundering and drug dealers.
Right.
Right? So again, if you look at what he's saying, you're going to sell your Bitcoin, right?
Yeah.
You're going to say, oh, this is all BS. But guess what is happening now? They're going to launch an ETF. They're looking at an exchange-traded fund that will allow you, allow anybody with a brokerage firm to make it as easy as hitting a buy button to go out and buy Bitcoin. So you've got to look at this preponderance of evidence, right? All these people are already wealthy. All these people care about their reputation. If Bitcoin is such a trashy asset, why are all these people getting involved?
This is kind of, it's really interesting because this is kind of like, in a much more positive way on this side than what these people are doing. It's kind of like with Donald Trump. You don't listen to what he says because he'll say some stuff that's like, what? Watch what he does.
Right.
Because what he's doing is making sense. If you're a conservative, it's making sense.
Right.
And it's moving orderly. But what he says sometimes is almost misdirection.
Yes.
That's what they're doing.
Misdirection.
Okay. Let's talk about Nextel and Apple.
Okay, yeah. So I want to talk about what has separated me in this marketplace. I think what has allowed me to show my readers such massive gains, and the reason why I don't just sell right away is because some of the experiences that I went through in the past. So between 1990 and 1991, I was a kid, and I had loaded up on tech stocks. I had a lot of Microsoft, a lot of Oracle, stuff like that, and I had a bunch of it personally. And then the whole market crashed, and my Oracle went down 85%. Right, on a split-adjusted basis, it went down to 12.5 cents a share, and I got scared out of a lot of it. And I sold a bunch of my Oracle, and I sold a bunch of my Microsoft, and because it was a crash, just like we're in right now.
Right.
I went back and I looked at the math, and by the end of the decade,
don't do that.
if I had held those positions, I would have been $20 million richer, just on two stocks. On two stocks, right? That was the magnitude of that move. And you would think I would have learned my lesson. In 2003, we had another crash. I sold my Nextel, which was a great company.
Yeah.
Sold it at $2. Less than a year later, it gets bought out at 14. 2003, I'm super early on Apple Computer. I'm in at like a split-adjusted basis of around $1.
Oh my God.
And owned it for a couple of years. I thought I was making a killing on this idea, sell it, and if I had held on to it, my clients, because of the amount that we owned, collectively, my clients would have made $49 million.
Oh my gosh.
Right. So these lessons are very real, Glenn.
Right.
And so I have been through this cycle over 3 separate decades, and I've got a do-over now, right? 23 years later from 1990, I've got a do-over. And so my mission here is not only just to grow my wealth, but to help America grow their wealth too. I mean, the average American investor got blown up in 03, got blown up in 08, and their savings have just been absolutely demolished.
This is a chance for people
to rebuild.
To rebuild and rebuild in a dramatic, possibly generational sort of way.
Without risking
a lot of money.
A lot of money.
Okay. So I'll just encapsulate this. What you're saying is they've played their card.
Right.
They've driven the market down.
Yes.
These kinds of early techs, we'll show you here in a minute, it's very volatile. But then at the bottom, they say, don't go in, it's going to crash, it's going to be worse. They all start buying.
Yeah.
You're saying now is the time to get in.
Now is the time to buy.
Because they're coming.
Yes.
And
now,
once they come,
you will see this market absolutely explode to the upside.
So now let's go back to the 5 corrections. This is 1 year.
That's just last year. Yes. That's
Explain this.
So I had recommended Bitcoin back here, and in 2017 we just saw this massive volatility. And you got to remember, if you don't see that, you see this big move down, and you're freaking out. So every time this happens, most people...
I mean, a 40% crash is scary.
That's what happened in July.
Right.
But I would say what separates me is that when we see these big these moves down, I get in front of a camera and I shoot a video, and I explain to my readers
You don't hide.
what's going on. I don't hide under the counter, right? I let people know what's going on.
And here's the really important part here. If you buy at the low,
Right.
at the next crash, you're still higher.
Yes.
If you buy here at the low, the next crash is here.
Yes.
You buy here. So if you're buying at the crash,
Right.
even if you buy at the high, you're still higher than the last crash.
Right. So this is one of the reasons why I say that Bitcoin is not a bubble, because if you look since 2011, we've had 4 major moves from lows to high, from lows to high. And even if you bought at the high of each move, you have still made money.
Right.
And that can't happen in a bubble.
No.
That can't happen in a fraudulent asset class.
Okay, so the stock market is different. It crashed like this, 39% or 30%. But that was 10 years ago. We don't have those wild swings.
Right.
But early tech does.
Can
we go back to Amazon and show the difference here early on with the crashes?
Right. So here, this could be a cryptocurrency chart, right? I mean, this is from 94 to 54. Oh my good Lord, right? I mean, that makes you want to throw up when you see that.
Right.
Right. You know, from 246 to 173, 402 to 297. This is just horrible volatility.
And no one, if I owned it at 402, knowing me, and it goes to 297, and I don't see it going back up, I just see this, I begin to panic.
Of course.
And I think we should sell some of it.
Right.
No one in their right mind today would say sell Amazon.
Right, correct.
Right?
Yes.
They would say, oh my gosh, you've got Amazon stock, when'd you get in?
And so this is the special sauce of what we do, right? How emotionally the average person can't handle that. And so I recognize that, which is why I recommend small positions.
Okay.
Because if you're not risking life-changing money, then you have the ability to handle that kind of volatility.